understand the process. So I'll start out with a blank Excel model. All right, so first thing in Excel is we're basically going to need an average selling price, and we're going to need a cost to get to a margin of, or we'll call it profit, contribution, which then gets to a margin. Now, I'm going to start out with the iPhone XS as a proxy. All right? So the reason why I say that is because if you do a Google search, start there. I did iPhone XR component costs, and they haven't come out yet, but I'll give you an example of what happened. So if you go back to the XS, there's a company called iFixit, and one of the things they do, and a couple of other companies follow them, is as soon as the iPhone comes out, the new iPhone, they do an autopsy of it. And it's actually broadcast live on the internet. It's kind of creepy in a way, but literally they dissect it piece by piece. And then they put it back together so they can get a fixability score. But the next thing they do is they look at all the components, and then they basically know what components are in the phone. Then they go look at wholesale prices, and they try and get an estimate of what is the actual cost to make the phone based on the component costs. And so Apple doesn't fully disclose it, but you get a general idea what the costs are, and then you multiply that, and you get pretty close to the cost to get sold. So here's the deal. For the iPhone XS that just came out, the 256 gigabyte version is basically $443. That's what it cost them to make. And they updated it recently to say they think it's about $10 higher with component costs, but somewhere around $453. So if I go back to my little spreadsheet, the XSs they're making for $453. Now, they haven't done this yet with the XR and publicly released the data, but I'd expect it's going to be out sometime in the next week or so. But they're going to have the same thing for the iPhone XR. Now, the next thing we would have done is we need an average selling price. So even if I'd gone to the Apple website, go back here, and if I buy, and we'll just use Apple as an example, which one do we want? Continue. I don't want the XR. I want the even more expensive one. Well, I'll use the, let's see, iPhone. Oh, there's the XS. Buy. And I'll use the full price one, the Max, which is what that's based on. And I'll buy it without a carrier. And we'll buy a gold one. That's fine. But the point is, you can see the prices. Basically, $1,100, $1,250, and $1,450. Yeah, they're that expensive. Now, if you buy the 64 gigabyte version, you're pretty stupid. Even in today's world, like I don't even know what you're going to put on that phone. Like just basically, you can download one movie and then the phone's unusable. So it's a real problem. You already did? Sorry. I'm not trying to get you to spend more money. I'm just saying that that's the problem. Is like they're kind of forcing you to go to that next model up because that first one, you're going to run out of capacity to put anything on it. So essentially, you're going to end up with the 256. Most people are probably buying the 256. If you really want to go crazy, 512. But that's the point. We have to forecast kind of model by or volume by model and get average selling price per model. Let's just, for simplicity's sake, in my simple illustration here, say that this is where we're going to end up somewhere around the middle, so around 1250. So come here, 1250. So we basically can see from, go back in our spreadsheet, that the XS max component costs are 453. The XS price we got to figure out, but somewhere around 1250. Back to our spreadsheet. So basically, every time you buy one of their phones, almost $800 in contribution margin profit per phone, right? And if I think about that as an overall margin, it's basically giving me an effective implemented gross margin of about 64%. Right? So here's the deal. I don't know what the cost for the XR is, but I have a pretty good sense of what the average selling price is, because same process, if I even look at the Apple's website, where's the iPhone? XR by apparently we have lots more colors to choose from. We'll buy the T-Mobile version and we'll buy it in Coral. Okay. All right. So 750, 800, 900. These are the cheap ones. All right. So again, 64, few people are probably buying those, but I'm guessing they're trying to push you to get to at least the 128. And then we'd have to figure out what the middle is. But let's just say I use this. I use the 799. So basically $800. All right. So now I just got to guesstimate the cost. So one thing I could do is, I don't know if you did a Google search, but when I was looking at this Google search for the XS Max, if I can go back a page, where's it here? There was an X from last year, $357. So you can see that the Max is about $100 more this year than just the plain old X was last year. And I'm betting that the XR might be even cheaper than this because they took out the OLED screen, which I was reading somewhere else. The OLED screen is something like $44, $45 a panel. Okay, so I'm just saying you can start almost granularly getting in and saying, okay, maybe it's around 300 or whatever, it's going to come out soon. Or I could say, here's my margin. If they have a similar gross margin for it, I can estimate a cost. Okay, but that's the point. I would need to kind of get some kind of reasonable estimate for a cost. Let's assume that it's probably going to come out to around $300 a phone. Now, again, different ways of estimating. I'm just talking through the process right now, not being exact, but that's the point. I'd get a contribution of average selling price minus cost and a margin there close to the 62%. So I'm also kind of triangulating, all right? Because if I had extracted 64%, I'd probably get to around $300 a cost. If I did $300 a cost, I'm getting around that 64%. Apple's been pretty consistent with their margins across their products, so I have a pretty good guess of what their cost is. Here's the next point. I know the price, I know the cost, the final thing is volume. So what is the volume change in decline? What did you guys estimate for that as you read? How many fewer XRs are they going to sell versus what was originally expected last week? Yeah.
0.7 million.
All right. How'd you get the 0.7 million?
Analysts expected them to be at 47.6, and they were at 46.
So you looked at it based on the EEO.
Yes.
All right. The only challenge with that is I don't know if the analyst, if you looked at when they updated it, like updated it this morning, because this is news that just came out. So I'm not saying that that's not the one way to do it. I only just question whether or not the timing says that they're actually doing what we're doing, and it may not be in Bloomberg yet. So that could be one way to do it, but it might be not enough given the timing. Okay? Yes?
We found a production decline of 100,000 iPhones a day.
Yeah, I saw a similar article. So there was So this is what started out in an Asian financial newspaper where they basically said, I think it was Foxconn or Pegatron, we're going to cut their production lines, and they had this many lines and that many lines. And they basically said about 100,000 phones less a week is what they were estimating they were asked to build. So you extrapolated times how many weeks?
We said 2 months, so 60 days.
All right. Why not for the full year?
Well, we assumed they weren't going to sell for a month, I guess.
Okay.
Well,
Well, I'm just saying that, let's assume they're going to sell a year's worth of phones, and if they do 100,000, so it may not be straight line. So I'll buy that, but I think they're going to still sell more than 2 months worth of forecast. But that's the point. What's the curve over the next 12 months before the forecast? With 100,000 less, what's the curve look like after the forecast? All right, let's keep it simple just for right now. Let's assume it's fairly linear. So 100,000 times, it won't be 52 weeks at this point. So maybe, I don't know what's left. We're 2 weeks in, so 50 weeks, 49 weeks. So that's like 5 million phones, 4.9 million phones. It's probably a little bit less than that, but so I'm saying we'd have to start making a couple more assumptions here. But I think it's going to be close to 4 or 5 million phones than 700,000 phones. Okay, but that's the point. We'd have to come up with this forecast. Let's just, for kicks, say it's 5 million phones. All right, so if it's 5 million phones, then here's the real key. Then, actually, I'll put it here. Then basically our revenue decline is the average selling price, assuming we got that right, times the units. That's about 4 billion, give or take. And in dollars, let's assume this is EBITDA, that works out to be about 2.5 billion of EBITDA. So if I were comfortable with these numbers, my next step is I'd probably go into my model, and for the next year's, under the tab for the assumptions tab, I would adjust down my analyst forecast revenue down by almost 4 billion, and my EBITDA by about 2.5 billion, assuming that they're not adjusting marketing and other costs to basically go down because of the lower sales. Yes.
The equation you have there,
All I'm doing here is I'm just saying price times volume, margin times volume. That's all I'm doing there. But as I said, what matters here is the 4 billion and the 2.5 billion. Now, as I said, I'm not 100% confident because we probably want to dig a little deeper, make sure that we're really getting a good sense of how much production decline there really was. I mean, that was just a quick swag from that newspaper article as well. But that's the point. Like if you're an analyst and you're sitting on the team that you just got this piece of information that's covering Apple, and I need to get this out to my institutional clients, I got to give them something more than cut your price by $3. So this is the granularity that we have to start getting into, and this is why the assumptions start to matter, because you don't do a top-down model, you do a bottoms-up model. And that's why I wanted to show you the one from Loop Ventures. Like most of the sell-side analysts, companies of some of its products, you forecast the products, you forecast the businesses, you add them up, and that's your revenue. So it's not that you're just looking at the top line of the company, like you're actually looking at as a product change, right, as a service change. And then how much does that change? How does it affect the company? And that's what we had to figure out with Apple that's going on right now. So it was just really the process to do this in the model, because again, we could have gone to our model, we could have gone to a ratio, we could have just reduced the sales growth by 1% and said, that should be fine. And then let it carry through. All right, that's the swag. I don't say you can't do it that way, but now when we go in and change it, we're a little bit more refined. And more importantly, we're now ready for the next question. All right, so the next question is, okay, does this affect anything else, or does this affect the future? All right, so now that they're going to sell 5 million less iPhones in this coming year, does that mean that I need to lower my forecast for next year as well? Is this basically a one-off, or is this a sign that things are actually really starting to change? Like we've been hearing, I even heard even today, people were talking here like, oh, I'm kind of keeping my phone. I'm not trading in my phone. Well, maybe that's happening more and more to Apple. People are keeping it for longer. In fact, there's a guy named Horace Daidu who actually did an estimate based on actual sales. What's last year, right, when they did the iPhone 10 or X or whatever the hell they call it? I have one. I don't even know what to call it. It's the X, right? Is it an X or a 10?
X.
All right. So here's the key. I heard X and S, or XS. Now it's XS.
Yeah.
All right. Anyways, here's the key. How long do people keep their iPhones based on data?
2 years.
4. That shocked me too. You look at Simco.com, Horace Daidu. You can see his math. And what he did last year when the iPhone X10, whatever you want to call it, was released, and Apple disappointed on its sales, he actually showed that the data has been going down for the last 2 years, from 18 months to 24 months to almost 4 years, that people are hanging on to their phones. You're hanging on to your iPhone for longer and longer, right? And that's part of the problem, is that the upgrade cycle is just not what it is. Now, here's the other thing that's bad for Apple if you go back to Thursday. What happened on the conference call on Thursday that spooked the analysts? So now I'm rewinding the clock, because their stock price has been down 10% or so since Thursday. Now they're under the trillion, but Tim Cook and then the CFO did something really bad in the analyst mind and investors. What do you do? Yeah,
They said they would stop showing the individual iPhone sales.
exactly. And why is that a problem? So if I don't show you how many units I sell in the future, why am I stopping showing you that? Because it's going to look bad. Yeah, if I'm selling more and more units, I want to put that on the front page of the Wall Street Journal. If I'm selling less and less units, I don't want anybody to know that. So essentially, it's a signal that sales are in trouble. Second thing that came in is the guidance they gave was at the lower end of the range of the analyst estimates. So remember the EEO, the analysts have estimates, they also have ranges. If you actually kind of hover over it, what's the high, what's the low? Apple came in below the consensus estimate for next year with their guidance at the lower end of the range. Well, that freaked the market out too, because that's not something Apple typically does. Apple typically has been more at the higher end of the range. So I'm not going to tell you how many iPhones we sell going forward. I'm just going to give you the revenue, and I'm going to guide your expectations lower. And then 3 days later, I'm telling my suppliers in Asia to cut production by 100,000 phones a week of the brand new phone that I just launched. Those are not good. So I'm just saying, we know that. We could have put that into our model, but I just want to get a little bit more granular. And that's what today was about. It was about practicing the granularity. Now I put this into my model, but then I still have to think about how this changes. Final part of a process is somebody asks the right question, which is, okay, if you did the as is, some of this might already be baked into the share price. So that's the point. Let's go back to Friday's share price. Do the as is share price based on Friday, not based on Monday, before this news came out. If we know what the delta is from this spreadsheet, that based on 2.5 billion EBITDA down, and I put that into my model, what's the change in share price from Friday's share price that my model shows? So here's the next key point. Did Apple get oversold today, or are they undersold today? Or is it the appropriate price? So maybe the stock price going down 3% today wasn't enough. Maybe the stock price going down 3% today was too much, or maybe it was just right. That's what I'm going to put in my note to my client. Oh, by the way, by 10:30 a.m. Get to work. All right? So I'm just saying, you're here at 8. You should have been here at 7:30. Hurry up. We got to get it right, and don't screw it up. Like, this is your job. All right? And I'm saying is when you're doing it, we need to have a little bit more granularity, and this is what makes your models better. Just this simple little bit of exercise is what I wanted to practice on. And you're going to practice again. Different company, different situation, but similar type of process for grade on Wednesday. See everybody on Wednesday.
So would we focus the change of these sales on the balance sheet as well, or do we not need to get that?
Well, because we're doing a DCF, you would think about it, and this is a good point. You would think about it in terms of the inventory. But one of the things I know in the back of my mind is Apple doesn't carry the inventory because they have 5 days worth of inventory because basically they have Foxconn and others, Pegatron, hold it on a consignment basis. So all these phones, they actually haven't purchased yet. So it's less for them about a balance sheet impact than a future income statement impact. So that's a very good point that if they had actually been manufacturing their own phones, we'd have to go through the balance sheet too.
Question about our model.
Yep.
Yeah, as is. So we have a growth rate